Ladies and gentlemen, welcome to the Solutions 30 web conference. I would like now to hand over to Jean-Pierre Fortis. Sir, please go ahead.
Thank you very much. Thank you, everybody, for being here today. Let me go directly to page 5, where I will sum up why we think that Solutions 30 is a good place to invest today. First of all, we are the leading provider of services in Europe in a market which is quite new. It's a market that was born in 2004, 2003, 2004, with the arrival of DSL to the mass market. We have been one of the first companies in Europe being active in this market, and therefore we have a first mover advantage. And since then, the number of connected objects has continued to grow in our houses, in our companies, and this makes the markets in which we are extremely dynamic and extremely interesting. Our business model is quite robust, with a good part of our costs that are variable. About half of the interventions we make are made with freelancers, which allows us to be very flexible. And also we are very careful with our fixed costs. We like models that are asset light and flexible. In our business model, density is key. It's very important to have a strong presence in a certain geographical area, because in this case, you do not waste time, our people do not waste time traveling from one intervention to another. The interventions are quite close one to each other, and this makes of us a very strong player in each of the geographies. And since the market is extremely fragmented, our competitors cannot have the same cost structure, and this is why we are winning market share. The other thing we are doing, since the market is very fragmented, is that we acquire companies. We have done 31 deals in the past 10 years, and we will continue doing so with acquisitions that are quite cheap and that we are capable to turn around quite fast. And the last point, which is important, is that our recipe has been proven in France, and now we are just doing a copy and paste, and we have done so in 7 countries at the moment. I would say 5 geographical areas, putting together Belgium, Holland, and Luxembourg. And each of these geographies has the potential to reach the size of France, which is going to be 300-400 million euros this year. So we still see a lot of potential in our capability to grow in the coming years. Sorry. Okay. Quickly, other 2 points. One is that our activity is made of 2 parts. One is deployments and the other maintenance. We have a majority of our activity that is maintenance and therefore recurring. The deployment part is made of activities that have a very good visibility. Our deployments are things that happen over a long period of time, and therefore we know today how much we have to do for the coming years. Our activity is also quite well diversified. We work in 4 main verticals, which are telecommunications, IT, energy, and retail. Okay. Let's go directly to the important part, which is the numbers. So I leave the floor to Amaury, our CFO, which is going to comment page 9.
Thank you, Gianbeppi. Well, this first semester, 2019, was a new semester of strong growth, since the revenue reached 317.8 million euros against 176.7 million euros last year, which represents a growth of 80% in our revenue, which is fully in line with our expectations given the number of working days on the Q2 2019. This strong growth concerned both France and the other countries, since France grew by 74% and reached a revenue of 202 million euros with an organic growth of 20%. In the other countries, revenue grew by 90% and reached 115 million euros with the strong organic growth of 70% due to the strong contribution of the Telenet deal over this first semester. So given the strong growth that we had, especially especially in the other countries, the revenue outside of France now represents 36% of the group revenues. Now, if we look into more details on the growth drivers of these first semesters, we note that the growth is still well balanced between organic growth, which accounts for 37%, and external growth, which accounts for 43%. France posted an organic growth of 23.1 million euros, boosted by the fiber activity, as well as by the installation of smart meters in energy and gas sectors. Part of this growth is also related to the significant contracts won by Solution 30 in 2018 that we announced last year, and that are operated by the companies of the group, including the newly acquired companies. In the other countries, we had an organic growth of 42.1 million euros, mainly related to the contribution of the outsourcing contracts we signed last year for a total amount of 35 million euros. Regarding external growth, the CPCP and Sotranasa contributed for a total amount of 63.5 million euros in the revenues of France, and the external growth in the other countries amounted for 12.4 million euros, resulting from the acquisitions of the remaining 50% shares of Janssen Field Services in June 2018, and from the acquisition of Salto Telecomunicación in Spain. This acquisition occurred at the end of Q3 2018. I now leave the floor to Gianbeppi, which will detail the dynamic of the different verticals in France.
In France, the activity has been very strong, with 74% growth in the first half, of which 20% organic. Main drivers are related to the telecom vertical, that basically doubled the size in 19 compared to 18, and energy sector, which again almost doubled its size. Two main dynamics here are FTTH in France and deployment of gas and electricity meters in France. In the other verticals, in retail, we have won a contract to deploy equipment for payment terminals in 6,000 shops, and we also won a maintenance contract for 7,000 shops. And in IT, we have quite a lot of tender offers ongoing, two main ones being with Oki and Xerox for printers. I should also remember that currently in France there is about 5 million houses that are connected to fiber, out of a total of 28, so there is still a lot to do for deployment. And I should also remember that besides deployment, we also do maintenance, and maintenance is an activity that stays basically forever, and it's just a percentage of the installed customer base. For the meters, 19 million meters, electricity meters, are deployed as of now, out of a total of 35. And concerning the gas meters, there is 3 million deployed out of a total of 8. So still a lot to do for both electricity and gas meters. The good things come from the charging station side, where we have signed a contract with the national utility, EDF, for France and also for the other countries. And we actually began doing the first installations of charging stations in the first half of the year. And then we see growth coming for the rest of the year, in the second half, and also next year. In particular, we have established a partnership with Alfen, which is a specialized manufacturer of charging stations that has about 50,000 charging stations already deployed in Europe. We have been awarded the contract to maintain these charging stations. So we believe the charging stations activity should become significant for us beginning 2020. Abroad, we had very strong growth in Benelux, thanks to the implementation of the contract with Telenet, where basically we grew by 250%. We also had a strong growth in Spain, same kind of growth, 230%. And in Italy it was 20%, and while in Germany it was stable. Germany was stable because our clients, telecommunication operators, are quite slow in deploying and ramping up the contracts that we signed with them. But we are expecting good things in the second half. We know already that we are going to grow our activities with Unity Media beginning in August, about 25% increase. And we also have new activities coming from Vodafone, who is planning to move its clients from the DSL network, that is expensive, to the cable network of Unity Media. Vodafone and Unity Media are going to merge in Germany. In the rest of the countries, well, in all the countries, we are just pushing the business model that has proven to be successful in France, and basically we are just pushing the same strategy with the same type of clients in the same way in all of the countries. In the telecom space, we now have a very strong position in Belgium. We see good opportunities in Holland, where we are looking for external growth opportunities. Spain is a market that is currently very active, with a quite high penetration rate of fiber, but still growing. And it's a country that has begun implementing 5G. So it's an interesting market for us. We acquired this year, in the first half, a small company called Provisiona, who is a specialist of mobile networks. It's small in terms of revenues, so the contribution this year is going to be only 3 million euro, but it's important in our strategy because it's a way to open the doors of the operators on the mobile network side, and also begin working with equipment manufacturers, in particular Ericsson and Nokia. And these companies told to us, not only for Spain, but also for the rest of Europe. So it's important in terms of strategy because it's the beginning for us of our activity in the 5G space. In Germany, as I said before, slow in the first half, but we expect good news in the second. And in Italy, an okay growth, I would say, with the market situation in the telecom space that is still not as it should. The new CEO of Telecom Italia is now in place, and he has put a new management team in place. But the team is still not up to speed. And there is also a plan to merge the activities of Telecom Italia with Enel, and this is going to take some time. So we expect Italy becoming more interesting for us next year. For the energy activities in Benelux, we are participating to the rollout of smart meters that is coming. And we also do we are quite active in the sector of charging stations, with Holland being quite active in this sector, and with our Dutch clients, and in particular Alfen, deploying now their strategy outside Benelux. In particular, it's interesting, a new contract that we gained in Germany with E.ON. It's small in size because it's the deployment of only 44,000 electricity smart meters, but it's very good news for us because it's the beginning of the deployment of smart meters in Germany. This is something that we have been waiting for quite a long time, and it's beginning now. In parallel to the pilot, E.ON has begun to talk to us also about the full deployment that we expect to begin at the beginning of 2020. So we expect good news for us in Germany for next year in the energy sector. In Italy, we have been acting on both smart meter and charging stations for electrical vehicles. And the best piece of information, best news we have there is the contract that we gained with the national utility Enel, where we won we won the maintenance of about 1/3 of the charging stations that currently exist in the country. It's just a few thousand, I think 3,000 or 4,000. We have 33% market share of that. What we know is that at the end of this year, there is going to be 6,000 charging stations installed, and by 2022, between 15,000 and 20,000 charging stations installed. So we believe that the activity related to the charging stations is going to become significant next year for Italy and also for the other countries.
Now, some information about our financial structure. So over the last 6 months, we improved our cash position by almost 25 million euros, and our cash position reached 94.8 million euros at the end of June. We also paid back 5 million euros of our debt over the semester. Now our financial debt stands at 77.3 million euros, and because of these two effects, we improved significantly our net debt, and we are even now cash positive. Since in December, our net debt position was 12.4 million euros, and our net cash position is now 17.5 million euros in June. Included in this cash, you have some inflows that can be regarded as outstanding inflows that are part of the outsourcing contracts we signed last year in order to cover some transition costs and some integration costs of Telenet and DXC people. And this amount was 10 million euros. Even if you exclude this 10 million euros of our cash position, then the remaining cash flow generated over the semester is above 6% of total revenue of the group. Therefore, our financial structures improved a lot of the semester. It is strong, and it's explained by two things. First, our model is generating cash, and second thing is that we applied a strict control over our working capital without increasing our factoring position, since our factoring position at the end of June was 46 million euros, so 10% less than in December. On the following slide, you have a model illustrating the way we are generating cash and the way we are using it. First, we have increasing revenues because of two main drivers. First driver is the dynamic of the markets on which we are operating, since you can see that there are more and more digital stuff out there. And the second thing is related to our M&A policy, since we are really wanting to consolidate the fragmented market on which we are operating. Then we always have had a strong focus on the profitability. We are focused on the profitability of our operations, but we are also focused on the quick turnaround of the companies we are acquiring. And because of that, our model is generating cash. Over the last few years, we generated a free cash flow of 4 to 5% of our revenues on average, with limited needs in terms of organic capex and limited needs in terms of working capital because of the use of factoring. So now, thanks to these strong cash positions that we built because of our activity, we managed to have a very low leveraged model. Our net debt over EBITDA ratio at the end of December was 0.3 and is even negative at the end of June. So that's very good in order to finance and to get financing for our M&A strategy and obtain good financing conditions. And then all the remaining cash is invested in the growth of the company, invested in the acquisitions that we make, and fuel the model again. So our financial structure is strong and will remain the same.
So all in all, we remain very confident with the future of our activity. We know that 19 is going to be very strong, and we also expect a very good 2020. And our focus is really to deploy the model we have in place in France in each of the geographies in which we are. We are currently in 5 geographies. We think that each of them has the potential to have the size of France today, which is between 300 and 400 millions. We also expect, with a little bit of luck, it's not sure 100%, but we expect to open Poland in the second half of this year. And Poland can be a significant contribution to our group revenues because it's a 40 million people country investing a lot in telecommunication and energy infrastructure. The activities that are significant today for us and that will contribute to take us to our objective in the midterm of 1 billion euro revenues are the fiber deployment in Europe. In page 20, you have the current situation in terms of home passed. It's the bottom left part of the chart. The first column is home passed per country, and then you have the penetration rate of the home passed. So as you can see, Spain is quite advanced, but there is still quite a few things to do, quite a lot to do, and then the other countries are behind. I remember France has about 5 million houses connected, which is a little bit more than 20% penetration rate of the houses of the country. The other countries are behind, and therefore we believe we will have good opportunities for growth in the other geographies beginning second part of this year and especially next year. Concerning the meters, again, you have some information in the same slide. Most important information is that Germany, which is the largest country in continental Europe, has not begun the deployment yet. Well, has just begun now with this first pilot that we are participating to, began in July of this year, and then followed by the full-scale deployment beginning most likely next year. The other current driver of growth is, of course, external growth. The markets, the geographies in which we are still extremely fragmented, and we are the natural consolidator, being the largest player in these geographies. Concerning the future, Concerning the future, 5G is going to be an important driver for us. The acquisition made with Provisiona is the way to enter this market. So we have begun working in Spain on 5G on behalf of the equipment manufacturers, preparing the 4G side of the operators for the arrival of the 5G equipment. And then we believe that this will follow also in the other countries, and therefore we are preparing for that. The other driver that we believe is going to be important is charging stations for electrical vehicles. As we said before, we have begun to win the first contracts, and our sales activity is quite active in this vertical. So we believe that this activity will begin to contribute to our revenues in 2020 and then for the future. The third element that is going to contribute to our growth in the coming years is Poland, that we are expecting to open in the second half of this year.
We are working also on our move to the first compartment of the Euronext market next year, and because of this objective, we have adopted a number of initiatives over the last semester in order to improve our communication on our governance and improve our financial transparency. And we will continue to take this kind of initiatives in order to prepare this move forecast for mid of 2020. Our efforts in terms of ESG policy were awarded in June, since we obtained the EcoVadis label recently. We also released a number of documentation related to our governance, our remuneration policies on our website. And we also disclosed all the governance rules related to our remuneration committees, audit committees, strategy committees that are available on our website. In addition of that, we are presently working on a management incentive plan in order to ensure that the objectives of the management are fully aligned with the objectives of our shareholders. So we are working on it, and this should be mature by the end of this year.
Yeah, we are doing it. We have asked ISS, the consulting part, to help us to make sure that what we are going to publish is going to be 200% compliant with what you, as investors, are expecting. So not bad surprises on that side.
Then you have a view on the macro planning of our transition to IFRS and our transition to Euronext. So the first stage of this transition is now over. It mainly consisted in implementing new finance tools and perform a gap analysis between our current accounting gaps and IFRS. So this first stage is over, and we are now in the middle of the second stage, which consists in producing our historical financial statements under IFRS. So everything is in line with our schedule, and this should allow us to start the third stage of this transition at the end of this summer, which will consist in producing all the documentation required by the IMF authority in order to prepare our move on the Euronext market, on the regulated market, in the middle of 2020. So everything is in line. Management has strong focus on this transition, and we are convinced that because of this transparency, we will be available to attract more international investors.
Okay, we are done on our side. We leave you the floor for Q&A.
Ladies and gentlemen, let me remind you that if you wish to ask a question, you may do so by writing on the web platform right underneath the slides. Please make sure your name appears while asking a question and simply write out your question. Thank you very much.
Okay, so we have a first question. You explained that your growth generates a higher percentage of net results. Will that be the case on H1 2019? That's true. When we get the scale in one country, then it helps us to improve the profitability because of the density of our technicians. When we reduce the traveling time of our technicians, we manage to improve our profitability. On this H1, expect stable margins because we were in the phase of preparing the integration of large companies such as CPCP, Telenet, and Sofanaza, but the margins should improve later.
Yes, we have a question concerning the size of the contract signed with Enel in Italy. It's not going to be significant in this first year. We expect less than €1 million revenues. Hausen is saying, do not expect any significant contribution in 2019, but we expect in 2020 an activity that is going to be significant for most of our subsidiaries. So this activity is going to become visible in 2020.
Okay, so the next question is, consensus expects about €670 million revenue this year. Are you still comfortable with this despite the slowdown in Q2? Would this figure be possible without new acquisitions? The first thing, You can note a small slowdown in our revenue on Q2, but this is due to seasonality effects, and that is very normal with what we observed over the last years. Actually, there were less working days on this Q2. There were lots of bank holidays, especially in Germany this June, and so this put some pressure on the revenues. But we are still in line with the consensus for the full for the end of this year. You can expect higher organic growth for H2, and we now have in the pipe some acquisitions that will lead to increase again the revenue on second half of this year.
Yeah, the opportunities in Germany. Risk that Germany skips fiber. No, and focus to 5G instead. No. In Germany, well, the client we are closest to is Vodafone, and it's also the one that has announced a 4 billion investment over the next 3 years, beginning in the middle of 2020. These 4 billions will be allocated 2/3 for fixed network and 1/3 mobile network. Now, the mobile network coverage of Germany is really not good, and in 2020, some of the investments on the mobile network will still be for 4G. Vodafone is still investing in 4G in Germany. So 5G will become, we believe, a little bit later. And at the same time, the investments in fixed network, or part of the investment of the fixed network, is going to be in fiber. So Germany is beginning to invest in fiber. And in any case, fiber is needed for 5G because you need to connect the site to fiber. So we are really expecting Germany to begin with fiber next year, and then also 5G probably end of next year and after. The country is large and rich, so we believe that the size of the market is very similar to the size of France. So the potential is similar. Maybe just another thing I want to add. In case operators decide to use 5G instead of fiber to connect some clients, especially in rural areas, you still need to deploy on the customer side some 5G equipment. 5G is not good to go through glasses, through the windows, through walls. So you need a receiver installed on the customer side to be able to get the signal through 5G.
Okay, so the next question concerns, can you remind us the working day impact on sales and margins at the group level in Q2? How do you expect contracts to ramp up in H2? Well, as I was explaining before, we had a number of bank holidays on this Q2, so we have always had this seasonal effect. Usually, April and May are not good months, but we had even less working days, especially in January in Germany this June. So the impact is around something like 6 million euros approximately on this Q2. We do expect ramp up on H2 mainly because of two effects. First, we are going to start new areas in terms of FTTH deployment, so we know that. And we have also the very strong back-to-school period, which is usually an important period for us during September and October.
Yeah, and also in Germany, we announced it a few weeks ago. We have won an additional 25% revenues with Unity Media. The ramp-up is going to begin in August and then move up in a linear way between August and December, and then it will be up to speed for the full year 2020.
So the next question, could you please remind sales contribution in France from fiber deployment in 2018, and what are the expectations for 2019? And what organic growth do you expect in France in 2020, and what should be main growth drivers? Okay, so in 2018, the fiber deployment was over 100 million euros. On this first half of 2019, we are approximately at 60 million euros. So you can expect high double-digit growth on fiber deployment with an acceleration on H2 this year. And regarding organic growth in 2020, you can expect an organic growth, strong organic growth with the start of new regions starting on the second half of 2019.
Yeah, it's hard to tell today, Anna. What we know is that there is going to be new deployments beginning in September, as Amaury said, because there are some regions and some departments in France where there is some public money coming to the market to bring fiber in rural areas. And these deployments will begin in September, and then they will continue for a certain period of time, for a significant period of time. So we will have this contribution in the second half of this year and also for the full year 2020. Hard to tell you exactly how much because the ramp-up has not begun. It's going to begin in September only.
Sorry.
Yeah, a question about margins.
Should EBITDA margins 2019 be higher than 2018 thanks to bigger scale in Benelux due to Telenet deal? What I can say is that we are now the integration of Telenet teams is almost finished, and we are now close to the normative group margin of 9%, so which is good. This was not the case at the beginning of this year because we were still in the middle of this integration. But I would say if you want to stay on the safe side, expect stable margins for this year with an increase next year on this Benelux scope.
More outsourcing deals like Telenet and DXC in the next few quarters. No, I don't think so. We have some discussions in place, but this kind of deal takes time. I'm pretty sure there will be more, but not in the coming future. I would say not in the next 6-9 months, unfortunately. These companies are quite reluctant to adopt new structures for the contracts. It takes time. It took us almost 18 months to close the deal with Telenet. And therefore, I do not expect closing similar deals in the short time. Yeah, 100 million cash. Yes, we have the possibility to do acquisitions. Of course, we keep our options open. So we have quite a lot of firepower now. At the same time, there is not many large, quote-unquote, deals available. So I would say we are going towards larger deals, little by little. I do not expect something really significant in the short term. But yes, the size of our M&A should increase little by little. How do we enter Poland? Yeah, what we have done has been to ask Orange, which is, of course, a client we know extremely well, to introduce us to the team that is in Poland. Orange Poland is the national operator, so the French guy that we know extremely well introduced us to the Polish team. It's taken some time, but basically Poland is now very happy to see us coming. and implement processes that we have already implemented in France. And at the same time, we had information concerning the existing partners, Polish partners of Orange Poland, and we met all of them, basically. So we have some opportunities of external growth in the pipe. So I would say we have a very good chance to open Poland in the second half of this year, either with a small activity for Orange that we will begin organically, or with the acquisition of one or two small local players. Within Poland, oh, and yeah, we believe there should be a contribution of Poland to group revenues in the second half of this year. Most likely not significant, and then significant in beginning 2020. Oh, yeah, contracts in Germany. Well, it's both. We have market share in areas that are close to the areas in which we are already, and these are the easy ones. And then we also have some opportunities to go beyond, so it's a mixture of the two. We are managing to find new people, yeah, we do, and yes, it's not easy. So that's actually the most difficult task we have in Germany, that we overcome also bringing people from outside Germany. So we are doing it. We are going beyond the current areas. It's not easy, but yes, we managed to do it. Oh, strategy for offshoring, nearshoring, call center support. Well, basically the idea is pretty straightforward. When an activity can be done behind the screen, we tend to put it in a place that is cheap. So our activities are mostly near shore because we want them to be not too far to be able to easily train people or change processes if need be. But definitely our strategy is not to have back office activities in countries unless there is clients that have specific needs or some constraints in terms of utilization of customer information. In this case, we leave it in countries, but we also ask for a higher price. So our strategy is to offshore all of these activities.
Okay. Oh, we have a question about factoring. What could be an expected amount of factoring over the full year versus the 46 million euros at the end of June? Well, the factoring position is part of our processes, so it should be in line with our revenues. The amount of receivables sold is usually corresponds with 1 month of revenue. So you can expect an increase at the end of 2019, which would be in line with the increase of our activity. We are also integrating into our factoring program, all the companies that are under integration phases. So I would say that we should be around 60 million euros at the end of this year. Oh, we have another questions related to factoring and cash needs. So you're right. CapEx needs are under control over this first semester because we didn't make acquisitions over the last 6 months, and our working capital needs are in line with the growth of the activity. But as we are using factoring, and that's very important, again, we need to finance expenses on the short term. We need to pay salaries and small subcontractors, where we are paid by our customers at 90 days on average. So that's why factoring is definitely the best solution for us. So we will continue to use factoring.
But I think the question is more if we need to do a capital increase to reach the 1 billion. The answer is no. We have enough with our cash flow generation. We are still not very leveraged, so we still have room to do some more debt. And factory is just a good way, and the cheapest and the most effective way to finance short term. And given the quality of our clients, we do not have problems to use that to finance short term. And it's the most efficient solution. So no, we believe that we can reach 1 billion without doing a capital increase.
Well, we have a question about margins and the impact of IFRS. When you mentioned stable margins this year, does it take into account the positive IFRS 16 impact? No. Actually, I'm talking about existing gaps, without impacts of related to our transition to IFRS. But you're fully true. IFRS 16, so the standard that is relating to car leasing or office leasing will improve our EBITDA, but when I'm talking about stable margins, I'm talking about normative accounting gaps. Question about the capex level of 1.5% of sales. Yes, it's true. On average, we invest every year 1.5% of our revenue in our IT platform. So that is really key in our business because we receive 60,000 interventions per day, and we really need to invest in this tool to build interfaces with all our customers, and this demands permanent updates so that to keep up to date with the evolution of the IT systems of our clients, with the new requirements of our clients in terms of KPIs, in terms of information required. We introduced, for example, last year, a new functionality that allows to follow in real time the localization of our technicians, because this was asked by our customers. We invested a lot in this IT platform in order to make connections with Telenet last year. So that's part of our business. And each time we start a new business, each time we start with a new client, each time we integrate a new company, we need to invest. We have now almost 80 people working on the development of this IT platform together with some subcontractors, and that's really the only place where we need to invest our money. But it remains quite limited at the end of the day with 1.5% of our revenue.
What are the most important criteria for M&A targets? Is the two main criteria are access to clients. So we like companies that have a relationship with clients that we still do not know, we do not have, or in regions that we still do not operate. And the second criteria is density. So we like companies that allow us to be more dense in a certain geographic areas. So priorities goes to the geographies where we do not have the critical size or we are missing some important clients. How do you manage to control the huge growth operationally? Well, yeah, the growth is very strong, but at the same time, our model is quite decentralized. So at the end of the day, when you have a strong central organization in a country, it's quite easy, quote unquote, just to copy and paste and basically add teams. The other important thing is our software platform. As we said before, it's the place where we invest money. And yes, it's a lot of money, but at the same time, once this is in place in a geography, it's quite easy to add people and keep them under control. With the platform, you can see in real time where the people are and what they are doing. And you can see the ones that are doing a good job and the bad job. You can see if they are on time at appointments, if they are late at appointments, how much time they spend to do the work, if they have to go to the client twice, and so on and so forth. So I would say that with our tools and our processes, we are capable to keep our growth under control. And the proof of that is our margins. We have been able to maintain our margins while having a very strong growth.
Okay, we now have a question about IFRS. Does IFRS really have an impact on your balance sheet? Well, actually, we will have an impact related to IFRS 16 because we are leasing the cars of our technicians, and we have almost 4,000 cars in the group. And so today, all the leasing costs are regarded as OPEX and impact on our EBITDA. Tomorrow, with the IFRS 16, cars will be included into our assets as if we were the owner of these cars, and we will have in front of that a debt for a similar amount. Okay, this debt will be excluded from our bank covenant, so it's just an accounting debt. We can expect an impact of approximately 40 million euros. And the other impact that we will have on our balance sheet will be related to the amortization of goodwill, because today, under Lux GAAP, we have the gross amount of goodwill, and then you have the amortization of these goodwills. With IFRS, we will take the net book value of the goodwill at the start date of our transition period, and we will just apply then impairment tests. We are already doing this impairment test together with KPMG every year, and we have no risk of impairment on the short term of this goodwill. So that should be the only impact on our balance sheet. We'll have some impact on the P&L side as well, because again, related to this IFRS 16, the car leasing costs will be excluded from the EBITDA under IFRS, so the EBITDA will go up, but you will have additional amortization of the cars and financial expenses related to this accounting debt. So the impact on the net profit should be zero. Under IFRS, we will not amortize any more goodwill. So in 2018, the cost of this was 3.8 million euros, so that should improve the profit. And we can expect also an additional cost related to stock option plans, which should be of approximately 800,000 euros for 2018. And that's the main impacts that you can expect. No significant impact on top line, no significant impact on the cash position. Well, that's all.
Now, or your software development work, do you own it outright with this? Okay. So, yeah, SmartFix. Well, SmartFix now has become a functionality of our IT platform that we provide to our clients. So we do it now systematically. They like it, so we have quite a few that now use it. The development is done by our IT team, and as Maurice said, it's a little bit less than 100 people between internal and external. We have quite a few developers that are outside, but we control the project management. So our project management is on our side, and of course, all the rights are on our side. So Solutions 30 has full rights on the software. Oh, okay. So a question, Muddy Waters. No, we had no contacts with Muddy Waters. We didn't see any report, so we have no news from them. We have no contacts from them. We do not know, unfortunately. I think we have no more questions. There is no new questions. No new questions. Okay. Thank you, everybody, for the participation. and for following us. Thank you for your confidence. Oh, sorry, last question. Key metrics to try to size the 5G opportunity. Can you detail the type of work done for very difficult. What we can say that now in the short term, all of the operators are beginning to prepare the existing sites, 4G sites, for the arrival of 5G. And it's a lot of work to prepare the site. There is some equipment to move around to make sure there is enough space to let the 5G equipment in. Some electrical work to make sure that power supply is right and all the connectors are right. So it's site preparation. It's a few thousand euro per site. I can't tell you exactly how much, but if you take the number of existing sites and you multiply by, I would say, 5 to 15,000 euro, it's probably the amount of money that is going to be invested in site preparation. And then the arrival of the 5G will mean new sites that will need to be deployed. It's still too early to tell exactly how many. I've heard lots of different information. Some people tell me it's going to be twice the number of existing sites. Other people are telling me 10 times the number of existing sites. We are still not 100% sure. And when that happens, it's going to be deployment of small antennas that need to be connected to fiber. Is still not happening yet, and therefore we are still not sure about the price that is going to be paid for that. It's unfortunately a little bit early to allow you to do an accurate estimate. We believe that it's going to happen, and we believe that it's going to be significant, and we believe that you are going to have a slice of the pie. Exactly how much and how fast, we are not sure. Okay, that's the end of the questions. Thank you, everybody. Have a good afternoon. Bye.
Thank you. Ladies and gentlemen, this concludes today's web conference. Thank you all for your participation. You may now disconnect.